Diwali has lit up the markets as Nifty steadily inches towards its all-time high mark. Samvat 2075 has ended and Samvat 2076 has begun with a bang. Over the course of the year, foreign investors' restraint has been a key talking point. But will the new year bring them back to Indian markets? We put the question to popular global investor Mark Mobius. He says he is very positive on India. Listen in.
I still am very positive on India, because not only because of the tax cuts, but I think something that's underlying the BJP approach is making government more efficient, digitalizing government procedures, making things easier and simpler for the people on the ground, for business people, particularly for smaller business people, and for the people in the countryside. I think this is a very, very significant change that's taking place, and it's pretty much unnoticed, I suppose, but will have a big impact on the future growth of India.
All right, and we've already started seeing the effect of the corporate tax cuts on the bottom line of these companies. We may even start seeing increase in risk appetite of businesses, which is always a precursor to growth. How do you see this playing out, Mark?
Of course, there are two things that work here. One, of course, the tax cut, but also don't forget interest rates. Cut in interest rates also has a very big impact. And I personally feel that India has more to go in terms of how much interest rate cuts they can tolerate. I don't think they should worry too much about the budget situation. I think in order to get growth, lower interest rates would be very, very good. And that would be in line with what's happening globally in emerging markets.
All right. Last Diwali came just a few months post the shadow banking crisis hit the system. Do you still feel that recovery is going to take some more time? And till that time, this last mile funding engine actually fully kickstarts, growth could remain a challenge?
Yes, we can expect quick results, because you must remember the tax cut, of course, helps. And of course, we would expect companies to make more capital investments. But many of these companies and banks, of course, have to get away with those bad loans that they've made for the banks. And for companies, the debts they've incurred, they have to cut those down. So some of that money would not necessarily go into capital investment, but in paying back these loans and also straightening out their balance sheets. But after that, I think then you're going to see a surge in investment, which will be very good for the market.
Taking this a bit further, what's the view on the banking system now and the pace of resolutions? At the beginning, the resolutions of the NCLT cases happen at a much quicker pace, but the process just seems to be getting longer now. Your view on how this is, what kind of impact this has on the banks?
Well, that's it. I think what we have to do is wait until these banks get their balance sheets straightened out, and this takes time. It's not easy. Because there was a lot of dead wood there, you must remember. But I expect that perhaps by the beginning of next year, after all, we're almost finished with this year, beginning of next year, you're going to see a surge in lending and also in more capital investment by companies. By the way, another aspect of this is a possible cut in personal income tax, because I think one of the things that the Modi government has to do is encourage consumer spending. And tax cuts in that level, at the consumer level, will be very, very good.
All right. Mark, you've always maintained that one should look out for value in the mid and the small cap space. Looks like that's just starting to play out now. Does this mean that the so-called mega caps, which up until now have been value creators, will start to see interest waning away?
I think so. I think you're going to see more diversification by investors. Not necessarily away from the big caps. I think you're going to get big cap investments, but I think the small and medium-sized companies will probably do better given this new environment. As I said, government measures to make life easier for these people will certainly work their way into the system.
All right. And how much of a concern is the revised IMF growth rate for India at 6.1%, which nonetheless is still not a very small number?
6.6% is really very, very good for so many countries around the world. Many countries would love to have that kind of growth. I know the latest quarter, I believe, was 5, and we're expecting 6 for the whole year. No, I think this is very good growth, and you must remember you can't have too rapid growth because that leads to excesses. But I believe that that level is very good, and I expect next year it'll probably be better, a lot better.
All right, and we hope that too. India, according to many, Mark, is not a one-year story. The government has taken proactive steps, and while initial disruptions have caused it, it has also laid down a stronger foundation for the next big spurt of growth. Do you agree with that?
Yes, I believe so. I think that it is very much in the cards. We're going to see terrific behavior of the markets and of the investment market, particularly in India going forward. It's going to be very exciting.
And which are the pockets that are exciting you now, Mark?
Of course, still looking at medium and small cap, but I'm particularly interested in the tech sector. I believe that there's going to be a lot more exports. I'm not only talking about software tech, I'm talking about hardware tech from India as the manufacturers shift away from China into other markets. There's an incredible opportunity for India to take up some of the slack that's happened as a result of the trade war between the U.S. and China. And that's where you're going to see not only, low-cost manufacturing, not only garments, not only shoes, but some of the technological items, whether it be cell phones, whether it be any kind of electric equipment, etc.
All right. Mark, how much of a risk do you see on the global front with regards to Brexit and the trade war overhangs?
Brexit, sitting here in London, you really don't know what's going on. Nobody seems to know. It's so confusing. I think it's so much talked about. The bottom line is that nobody knows what's going to happen. They do expect a split between the UK and Europe, but nobody knows how it's going to be developed. My guess is that it's not going to be as dramatic as everyone expects. In other words, the trade flows will not change overnight. There'll still be a lot of lines tying Europe with the UK. So probably not as bad as what is expected.
All right, then in that case, what's your view on the government's big divestment plan? Do you feel privatization is the best way of unlocking maximum value?
It's a tremendous way. It's a wonderful idea to have privatization programs to unlock that value. Not only to unlock value, but to make these companies much more profitable and becoming taxpayers to the government. But more importantly, I believe it's important for India to look at the international bond market. As you know, India has not been a big player in the bond market internationally, and it's about time that India started issuing international bonds to finance some of the spending. I'm not saying to go overboard, but to begin to tap that market, given the incredibly low interest rates that you now have.
All right, got that. Mark, one final question. I just want a view on gold. Last Diwali to this Diwali, gold has given double the returns of equities. Does one diversify into gold now?
I definitely do. As you know, I've been bullish on gold for a few years now, and I think you have to have gold in your portfolio. I'm not saying you put everything in, but 10, 15% makes a lot of sense. Because with the proliferation of money supply around the world, with cryptocurrencies, nobody knows what the money supply is. So gold is a very good hedge.